Good afternoon. Today is Friday, September 28th, 2007. This is Brian Shannon speaking from Alpha Trends, and the market has closed. We saw a little bit of a pullback here today. The S&P 500 was down 52 cents, or just about a third of a percent. Seems like I said yesterday that the market is getting a little bit tired in here, and just based on the big speculative moves that we've seen. A lot of times those big speculative moves come near the end of a rally mode. It doesn't mean it's going to reverse, but maybe the market needs a little bit more consolidation through time. You can see the market held up very nicely above this rising 10-day moving average. We've got the 10 above the 20, above the 50. The 50 is declining. That gives us a little bit of reason for concern, so it's not all clear basically on the S&P 500. But the market did pull back and test the prior level of resistance. That level of resistance was also, as I've been pointing out, a 61.8% retracement of the move from the day of the Fed to the next day when it made this high up here at about 154.40 or so. So the market acted good this week, but you can see that the last couple of days, last 3 days, we had a gap up on Wednesday, and then Thursday, Friday, we kind of just went sideways in here. The level that I thought the market might pull back to was about 152.15. And that's about where we did see the market come down to, maybe a little bit lower than that down here right next to 152. But it is holding above this 5-day moving average. Basically, short-term trend, it looks neutral to me. There's just nothing going on in here. It's going to really have to break out above 153.20 or so, or on the support level that I think would be, that if it were broken would be reason for concern, would be 151.65. So breaking below this level in here, if that were to happen next week, it could lead to a bigger sell-off. If that sell-off were to materialize, let's take a look at this daily time frame. Maybe we're going to see a test of the 20-day moving average. That could come in, giving the slope of this maybe at about 150.5. So maybe a retest of these lows from this week. It's possible for next week. But it's also possible the market can clear that 153.10 level and continue to rally. We're going to start seeing a lot more earnings reports, so it will be more of a stock picker's market, and you've got to be aware of when the companies that you're trading do report earnings. That way you're sure to not get blindsided by a report you didn't know was coming. But overall, again, the S&P 500 does act okay here, and no reason on this chart to be concerned. If we look at the weekly time frame, this is also painting a bullish picture. You can see that this prior level of very important support that it held for about 9 weeks, and then as resistance, it continues to hold above that. So this 150 level is going to be continue to be a critical area for the market going forward. So as long as it can remain above that, we generally want to give the benefit of the doubt to the buyers in the S&P 500. The semiconductors, like I said, this market's kind of more range bound than anything. It struggled all week with that 38.40 level. For whatever reason, that seems to be an important area for this market. It closed below it today. Today we saw heavy volume in here too. I'm not sure what to make of that. But big volume without further upside equals distribution. So we have to be aware that the 5-day moving average is now declining. But I don't think you really need to be concerned so much about it unless it breaks below this level. But breaking below 37.90, that would be a reason, I think, to get more defensive on the semiconductors, and perhaps then we're going to see a move down towards 37. But for now, that 37.90 to 39 bucks a share, that's basically the range of these semiconductors, and there's really not much happening in between there unless you're trading on a very short term. You can see here late in the day it tried to recover up above that VWAP. It wasn't able to do that, so it did sell off again into the close. The IWM continues to flirt with this 200-day moving average. It looked like we had a successful test of it on Tuesday. The market rallied back above it, but now we close basically right on it right now and at this prior level of resistance. So if this market fails, then this could be kind of a bigger trap and something that we would have to really take our attention. It could mean another move down towards that $78 level. Looking at the weekly time frame, it's still a mixed picture in here, but we do have this pattern of higher highs and higher lows. So just got to take it stock by stock, basically, is the way I think you have to look at it. What we were looking at, again, was I was saying that it really needed to get above and hold above $81 a share to consider that the buyers were really back in control here. The market attempted to do that early on today, but then quickly failed. And it did so on increasing volume, which is reason for concern. Then you saw the volume really diminish midday, and then the sellers reemerged and came in strong. So we had a very symmetrical move here based on the early part of the day to the early part of the day, strong sell-off and increasing volume. Then we saw a counter-trend rally, and then a sell-off again on increasing volume. And the increasing volume here during the course of the day, and basically the real lack of any participation in here during the middle of the day, it really shows how aggressive these sellers were in the IWM today. So reason for concern for sure in here on the IWM, and looking at this 10-minute time frame, it's come down to a level that is important, the 79.90 level, breaking below there. We've then got one other level that I think will be defended by the bulls, and if it fails to hold, that's the 79.33 level. If that level fails to hold, then I'd say look out below. This is going to turn into what looks like a failed move, and from failed moves often come fast moves. That level again is the 61.8% retracement as well of the move from the Federal Reserve a week ago Tuesday, when the market rallied strong from there up to this level last Wednesday, and then it's pulled back 61.8% retracement this week. Looked like the buyers were back in control, but now we've got lower highs and lower lows on this time frame. So let's clean up this whole mess and see that we've got a declining 5-day moving average. We've got a declining 50-day moving average. There's a lot of reason for concern on the mid-cap stocks, but we're still at this basically this line in the sand. So I would say don't get aggressive in either direction until we have some real resolution of that when it comes to these Russell 2000 stocks. The NASDAQ 100, again, this, I keep saying it, but it's almost trading in a world of its own. And if you look at, stocks like Google, RIM, Apple, those are the ones that are moving this market, and I think it's a very narrow-based rally. It's also a rally that's occurring on diminishing volume. Those are reasons to be concerned. They're not reasons to sell short. They're reasons to tighten your stops and make sure that, basically we've got a shaky foundation here for this rally is what it's telling us. So you want to be very defensive, but you don't want to sell short, because anyone who's done that in the last month and a half really has just been getting their teeth kicked in the market. So you want to look at it and say there's reason for concern, but the market hasn't told us it's time to exit these positions yet. Perhaps if you're really concerned, you lighten up on your long positions. We were looking for a move back to about 51.10. Market didn't make it quite that low, but it is still above that rising 10-day moving average, 5-day moving average rather. And I'd also suggested that you keep an eye on this trend line. That trend line was broken. Now these lows from today will be important going forward, but we do have a rising 5-day moving average. It's acting more vulnerable in here. And again, those Chinese stocks, a lot of them are starting to break hard. This JRJC, which has had just this fantastic run. I mean, you have to expect them to break down anyways after such a big rally. But some of the ones we'd been talking about were not ACTI. What was that other one? I don't even remember. Anyways, if you look at CHNG, for instance, that broke down hard earlier today. The PACT, CNTF, that one gapped up and completely failed today. So there's a lot of these Chinese stocks, and the CBAK, this one is starting to break down as well. So be careful. Those are very aggressively traded stocks. I'd mentioned that yesterday. Have a great weekend, and I'll see if maybe I'll put some ideas together for next week over the weekend.